In 1990, two significant events took place in the history of Norway, which had a huge impact on the development of the country. But at that moment, no one even suspected the extent of their significance. Take a look at these guys. A little-known band from the suburbs of Oslo, Mayhem, went on tour to Germany. They gave a number of concerts, but the most impressive was the concert in Leipzig. The vocalist of the band, Per Yngve Olen, nicknamed Dead, cut himself with a knife right during the performance, shocking the audience. It was with this concert that the rise of a new musical genre began, Norwegian black metal, which has since become one of the symbols of the country. There are more than 50,000 bands playing in this direction all over the world. There are even black metal bands in countries such as Saudi Arabia, Uruguay, and Iran. And even in small Scandinavian villages, there are representatives of this trend. The sale of records and tickets for concerts of black metal bands and related paraphernalia annually brings tens of millions of kroner to the country's budget. But the second significant event of 1990 was even more significant for the Norwegian economy. It was in this year that the Norwegian pension fund was established. Thanks to this, in just 34 years, the country's budget has increased by 7 billion crowns, and the total budget now stands at $1.71 trillion. What kind of foundation is this, and what was it really created for? Norway is the largest oil producer and exporter in Western Europe. Yes, globally it ranks only 10th in terms of production and 11th in terms of revenue. Nevertheless, its main market is developed European countries. That is a high-margin market. Although, if you think about it, Norway joined the oil club relatively recently. Oil was found there in 1969, when the market was divided between the main players, the United States, the USSR, Venezuela, and the countries of the Middle East. But perhaps this is what helped Norway to build a stable position in the oil market. After all, you must agree when someone nearby has already stepped on all possible rakes, you can safely walk along a well-trodden path and not make other people's mistakes. Norwegian oil production began in 1970, and it was a real lucky ticket for this country, because already in 1973 there was an oil crisis. Why would they be happy? The crisis began with the fact that then the Arab countries refused to sell oil to the United States and its European allies. It was a protest against NATO countries' support for Israel in the Yom Kippur War, against Egypt and Syria. That is, a huge chunk of the market was left without suppliers of raw materials, and Norway with its oil impressively entered this empty segment. The value of Norwegian oil has increased significantly. At that time, Norway along with the USSR were the main suppliers of black gold. And against the background of the events that took place, the price of oil then increased almost fourfold. A rain of money was literally falling on little Norway. But the money rain did not last long. Already in 1974, oil exports from Arab countries resumed, and prices plummeted. For countries with commodity-based economies, such events are a real tragedy. But what do you think happened to Norway then? Almost nothing. Can you imagine? Unlike the Arab countries, which lived solely on the income from black gold, Norway's economy was developed in many ways. The state earned money from fishing, tourism, shipping, and industrial production. Therefore, surges in oil prices did not have much impact on the economy. But what about the crisis of the 80s? Do you remember that crisis of oil overproduction when the price of oil fell to the price of $5 per barrel? Back then, many oil exporting countries were simply mired in economic problems. By the way, such a sharp decline in oil prices was one of the causes of the economic crisis in the USSR in the 80s, which in fact became one of the reasons for the further collapse of the country. And has Norway not even been affected by this crisis in any way? Yes, the Norwegian economy was not fully focused on oil and gas exports, and this really saved them. The country survived all the economic problems much easier. But there were still difficulties, and then the Norwegian government thought, how does it happen? One year we have a lot of oil money, another year we don't have enough. How would we balance it all out? And it was after these events that the Sovereign State Fund appeared, the one that was founded in 1990. Can you guess what it was done for? Every year, the governments of most countries of the world household adopt a budget for the next year, which includes all the estimated revenues and expenses of the country. If a country is engaged in the extraction and export of raw materials, for example, oil or gas, then it is logical that taxes from the extraction of these resources are important items of income. That is, the state should at least roughly understand how much oil and at what price it will sell in the next 12 months. But is it possible to predict this at all? After all, it turns out there are two unknown quantities in this formula at once: the amount of oil that will be sold and the price per barrel. And the state can only predict their values. For example, in neighboring Russia, the budget for 2024 is calculated based on the price of a barrel of $71 to $73. It is a little easier to determine the volume of sales because most contracts are concluded for long periods. But the price is constantly changing, and sharp jumps can lead to too significant a drop in the country's income. And now, think about it. What is the money planned for in the budget? Medicine, education, road construction, and much more. All this directly depends on oil prices. This means that if some unforeseen crisis event happens, the price per barrel will collapse, and with it, the budget will be shaken. And we all know perfectly well the examples of such events. Take a look at the oil price chart in 2020. The very year that taught us how to wear masks and wash our hands was also remembered for an impressive twofold drop in the cost of a barrel, from $56 to $25. At the same time, sales volumes fell, while healthcare and social benefit costs, on the contrary, grew. And it was in order to protect the budget from such unforeseen situations that the Norwegian state pension fund was created. And how does it all work? If oil costs more than a certain price, then all the surplus from the sale of raw material goes to the fund that manages this money. However, if there is a sharp drop in oil production and the cost of oil, then money is already taken from the fund to cover budget expenses. A simple but absolutely ingenious scheme, and as you know, it was not invented by the Norwegians. The first such national welfare fund was founded in 1953 in Kuwait. The official name is Kuwait Investment Agency. And in the 60s and 70s, similar organizations began to appear in many countries. In 1967, the Abu Dhabi Investment Authority was founded. In 1971, the State Investment Fund of Saudi Arabia. In 1976, the Alaska Permanent Foundation. Currently, there are similar funds in more than 50 countries around the world, and these funds have a lot in common. Firstly, most of them are state-owned. As you may remember, the Norwegian fund is part of the pension fund, and it is managed by a division of the Central Bank of Norway under the leadership of the Ministry of Finance of the country. In the same Emirates, funds also operate under the direct control of the government. Secondly, the main source of replenishment of funds is windfall profits from the sale of raw materials or some other business, and they earn money exclusively for the benefit of the state and future generations. The Norwegian pension fund is the most successful of all the funds in the countries, despite the fact that it started its activities quite late. Take a look at these numbers. Although the fund was established in 1990, the first money began to come to it only in 1996. It was 2 billion Norwegian kroner, and over 28 years of active work, the fund's savings have increased from 0 to $1.71 trillion. If this money is divided among all residents of Norway, then each citizen will receive $307,000 in their hands. Such statistics were available at the beginning of 2024, and on the official website of the foundation, you can track its status online. The amount is impressive, wouldn't you agree? And why does it have such high profits? The fact is that the fund does not just keep oil money in accounts. It invests it in various enterprises and businesses, and very actively. 65% of the fund consists of shares of various enterprises. Just imagine, a Norwegian fund has 1.5% of all companies represented on stock markets around the world. Impressive again, isn't it? And the remaining 35% of the fund is real estate and fixed income investments. The real estate owned by the Norwegian Foundation is located mainly in Western Europe, the USA, and Japan, and is actively rented at commercial prices, bringing a stable income. Also, a considerable part of the money is invested in companies engaged in the production of green and renewable energy. So far, there are only 5 such companies. It is impossible to list all the countries whose shares are owned by the Norwegian fund. After all, at the moment, there are almost 9,000 of them. Most of the names won't tell us anything, but there are the well-known Apple and Microsoft among them. In both cases, Norwegians own about 1% of the shares of these companies. The famous manufacturers of chocolate and sweets, Nestle, is also partially owned by Norwegians. They have about 2.5% of all shares. And do you know what the most interesting thing is? At first, the Norwegian fund was an exclusively passive owner of all its purchased shares, but recently it has increasingly become actively involved in the work of various companies. Since 2013, the fund has participated in more than 6,000 shareholder meetings. This means that at the moment, the Norwegians have a serious impact on the corporate governance market in Europe and China. For example, it is the Norwegian shareholders who are in favor of reducing the salaries of top managers of various companies, and in some cases they even manage to promote their position. On the one hand, this is good, because in times of crisis and market stagnation, it is national funds such as the Norwegian one that have a beneficial effect on the activities of companies. But of course, there are also disadvantages. After all, if you think about it, Norwegian standards are being implemented in commercial companies in different countries. Not everyone likes it. Plus, many countries and companies see this as a threat to their own sovereignty. On the other hand, Norwegians themselves are also becoming more selective because they are increasingly developing such a concept as the ethics of investing. In 2004, the relevant State Ethics Commission was established by decree of the King of Norway, and it would seem money does not smell. But not for Norwegians. In their culture, investing should fully comply with the principles of Norwegian policy. And how exactly does this manifest itself? The Commission ruled that the Norwegian Foundation cannot invest money in companies that are directly or indirectly involved in murders, torture, or human rights violations around the world. For example, investing in any companies engaged in the development of weapons of mass destruction is prohibited, but for some reason they can invest in ordinary weapons concerns. After such innovations, the Norwegian fund got rid of the shares of the aviation giant Airbus, as one of their subsidiaries was engaged in the production of nuclear missiles for the French Air Force. Investments in organizations using cheap child labor, forced labor, and dirty industries are also excluded. This is mainly related to companies from Southeast Asia and China. But not only. For example, shares of the American retailer Walmart were sold because of their violation of human rights. But of course, tobacco growers suffered the most. In 2010, the fund began to get rid of the shares of 17 tobacco companies. $2 billion were invested in them. And then the state made recommendations to abandon investments in individual coal companies and organizations that cause serious damage to the environment. But here's what's interesting. All these recommendations of the Ethics Commission are not binding. And if it was decided to sell some shares, then this is not done immediately, but at a very calm pace, in order to get maximum profit on the one hand, and on the other, not to harm the company's activities. But how did it happen that the Norwegian fund is the largest and most successful such fund in the world? After all, there are many funds, and the same Arab countries have much greater profits from oil and gas. If we recall Venezuela, then its fund faced a similar task, curbing inflation and ensuring the sustainability of the country's economy. But Venezuela could not cope with this, and as a result, its funds were squandered, and there was practically no money left for the needs of the population. The American Alaska Fund also does not claim to be the most successful because all residents of the state receive annual dividends in the region of $1,000. It is difficult to develop investments when you need to keep people from running away from the state. But why are Arab funds lagging behind their Norwegian counterparts? First of all, the competitive advantage of Norwegians is full transparency of investment. Anyone can visit the fund's official website at any time and see the full list of companies in which money is invested, while the same Arab funds are completely opaque. Moreover, due to the peculiarity of the Oriental character, the management of funds likes to take risks very much. Risk, of course, is a noble thing, but it does not always work. For example, Arab funds invested in shares of the American Citibank, losing a lot of money on this, and they were very wasteful in buying sports teams with stock savings. Arab funds regularly invest profits in real estate projects on the Arabian Peninsula, but not all of them turn out to be commercially attractive. And even in prosperous Dubai, you can find a large number of frozen construction sites. The Norwegians do not use the fund's money for any global hyper projects. Moreover, they cannot do it. According to the rules of the fund, the maximum amount of money sent to the country's economy is only 20% per year of profit. And until 2016, in general, all the profits received were returned to the fund and invested again. Yes, the Norwegian fund is not perfect, and even with such a well thought out system, stock fluctuations also led to multi-million-dollar losses. But one way or another, its capitalization is growing. And the question arises, can the Norwegian economy really not worry about anything anymore? And the future generations of Norwegians are now secured for many years to come? Opinions differ here, and there are two main forecasts. Pessimists claim that by 2030, the total capitalization of the fund will amount to $455 billion. That is, it will fall by almost 4 times. Optimists say that over the next 6 years, the cost will double and amount to more than $3.5 trillion. Of course, there are hotheads who offer to give $300,000 to each resident of Norway, but no one will do this. Firstly, because Norway is already a rich country with a high standard of living, and secondly, because such a sharp injection of money into the economy will instantly accelerate inflation. But one of the important tasks of the fund is precisely to contain inflation in the country, which, by the way, they do quite well, because the Norwegian krone is now one of the most stable currencies in the world, and the foundation also contributes to this. Is it even possible to repeat the success of the Norwegian Foundation in other countries? And what is the most likely forecast for the future for Norwegians?